Hello, and welcome to Pro Trader Strategies Market Commentary for Thursday, April the 28th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data coming out today in the form of GDP. GDP came in at 0.5%, was expected 0.7%, pretty close to in line with expectation. But the one caveat with this 0.5% GDP number is it's the lowest reading we've seen in about 2 years. So that kind of is a bit of a reflection of what we heard in the FOMC yesterday, that they aren't at any time soon going to be raising rates. I don't think they see the GDP numbers beforehand, but they can see everything else culminating. We've got low ISM numbers, things of that nature. They just know that the overall economy is not doing that great right now, despite the fact that we're seeing unemployment claims do much better. The unemployment numbers look pretty good, but at the end of the day, we got manufacturing kind of sluggish, and this GDP number, there's just no inflation. So there's no real urgency to start raising rates anytime soon. And I've been saying that for quite some time. Moving on, we've got natural gas storage came in at 73 billion cubic feet build. Was expected to 71 billion cubic feet build. So Midwest is having some cooler than expected weather here late April. 45 degrees and rainy in Chicago. So natural gas should be being used there. But moving on, the overall markets are coming back off of their highs. We did see the NASDAQ and the Dow pushing up into positive territory earlier this morning. As you can see here, the NASDAQ is down 8 points on the day, right in the middle of the range for the most part. Onto the E-mini S&Ps, they were just on their highs not too long ago, right there at that value area. As I've talked about so many times, it's really getting comfortable right here, and that's really causing volatility to come out of these markets. I mean, some of these earnings plays we're seeing just have no volatility in them at all. Like XOM, for instance, has like an 18% or 18 IB percent, I should say, and that is just really low for especially an earnings cycle. So moving on, as you can see here, we did just come off the highs in the last hour or so after a nice big rally off the overnight lows. It was looking like we were going to be pretty low off the morning, but the market has come back on those economic data points, probably because bad numbers are good for the overall equities, because the Fed is probably not going to increase rates anytime soon. On to XOP, I've been talking about this. We keep seeing these builds in crude oil. Crude oil, as you could see in that last chart, was up on the day. And XOP following suit with that, which is the XOP is the ETF for the oil and gas exploration. I still don't see a lot of exploration being a big factor right now, just because with low gas prices, the margins are really tight for these oil companies, and that first thing to be cut back on is exploration. They just kind of want to keep those current assets working at basically, right at the black and red line, which is the profit and loss for the most part. So I see this market still coming off, and I said I didn't really want to get short this, but I covered my 28.5 puts that I talked about yesterday in the market commentary. I have on a strangle and I have on a straddle in the May, but in the May I had on the 28.5 35 strangle. Now that 35 short calls is in the money, so I'm losing on that, but I'm looking for a little bit of a pullback. So at that point, I thought about rolling those 28.5 puts up to about the 35s or something like that to create another straddle, collect some more premium, increase my break even to the upside. But if the market starts coming back like I foresee it doing, then those puts are actually going to hurt me. So I just kind of decided to take the 28.5 puts of that strangle off, and originally sold those puts for 37 cents as part of that package, but that was that one leg of that, and bought it back for 4 cents. So now I'm short XOP because I'm short more deltas than I am long deltas. Now on to Twitter. Twitter just being the dog that it is, and after their earnings yesterday and the news coming out of there that people just aren't signing up is really hurting them. But I have on some short puts in there, the 21 puts that I'm short, that I've been short since basically December of last year for the most part, and have been lowering my cost basis on that by selling by rolling those puts out in time, and I'm collecting the extrinsic value, watching that decay, and then I'll roll those puts out again. Well, I also did that earnings trade against that, sold some calls that helped decrease my cost basis on that, and now I just went in there and sold some more calls for Twitter, and I did the June, sold the 17 calls for 42 cents, so that lowers my overall cost basis on those even further by 42 cents. So hopefully I can just keep rolling this out and at some point get a bit of a pop in Twitter and get back to break even on that to cover, or maybe even profitable if somebody comes up with some good news from there. On to Facebook. In Facebook, I sold some puts in there yesterday. There's two stocks that I do not like to sell, and that is Amazon and Facebook. You can probably throw Google in there as well. Those are ones that are just looking to take over the world in a sense. Amazon may come out with a loss again, but the fact of the matter is they use all of their operating income, any kind of income, to buy up different little businesses online. If you notice, they have this Alexa, which is the thing that garners the Alexa ratings and things of that nature, determines where these different websites are ranked amongst their peers. They just seem to buy up every little company that is out there. So they are going to push higher as well. But in Facebook, I did the April 100 puts, sold them for $1.03, and bought them back for a penny this morning on that big pop. So that was a nice little earnings trade. On to a couple of these Steve Primo strategy number 4 setups that I've been working on. And with Steve Primo, he's got the strategy number 4. He's doing this college class for trading, and this one's really starting to look good for this this strategy. And HOG is one of them that was in that Harley Davidson. And as you guys know, I don't like to buy different options, but with this, it works really well because you're expected to get a nice little move off of the rules rather quickly. So I don't have to worry about the theta decay as much, even though I'm going further out in time. I don't have to worry about that theta decay that much. And if it happens rather quickly, that theta decay doesn't really hurt me, like if I were going to do a longer duration type of play. So it's a very directional type of strategy. And in Harley Davidson, I did the June 50 calls, and I paid 98 cents for them. I sold them out today for $1.36. Now, on that rally that we had on this, yesterday it was looking pretty good. The 50 calls is where the we were supposed to be looking for, but it kind of covered this gap there, and today we're starting to see it come off a little bit, so I just decided to pull the plug on that. It actually might have even met the objective. It didn't meet my objective, which was the 50 calls, but it was looking a lot better yesterday. I was thinking at least it would go up and test the 50s a little bit more than it did, but came just shy of that, so I decided to cover that today. Now I'm going to go into all the rules that I've wrapped around this strategy number 4 on Saturday morning, so Go to protraderstrategies.com, sign up for that. Tomorrow's webinar on Friday, the one I normally do for myself, is going to be on long call spreads. So with this low applied volatility market that we're seeing, it's about the only type of strategy that we can really take advantage of this upward movement and the very low implied volatility. So stay tuned for that one. Go to protraderstrategies.com, and if you can't take that, take it easy.